Well, hello traders, and welcome to this week's Forex price action. In this video, I'll be focusing on the USD USD Swiss, the New Zealand dollar, Euro dollar, Pound dollar, Canada Japan, Euro Japan, Aussie yen, and a bit of just take a look at the DXY. So let us start. I'll start with the USD Start over the weekly chart. I usually begin my analysis at the weekly chart. If you look at the weekly chart, we're coming, price is approaching a multi-year top. This is around, this actually, if you see this high was formed in 2022, the 2022 high, led to this huge sell-off. The second time we tested it, did not lead to a huge sell-off as previously. So I'm expecting that the third bounce will probably also be weaker, and I foresee that we might actually, the 152 level might actually break given this week reaction on the second attempt at the level. But for now, I'm bullish. I have a trade in. If you remember in my previous weekly forecast videos, I had mentioned that you see this where I have a rectangle drawn. I had mentioned that once we see price retest to that level, that will be a good area to buy, targeting the larger 152 area. So I do have a trade in place, and monitoring it. I'll be taking another long trade once the markets open, because I had also mentioned in my previous forecast videos that once we clear some of these levels around 148.20, I can see there's also a level established just above that around 148.78. Once that is cleared, then that serves as a confirmation that these support area, which was acting as a resistance, has been broken. And I love the price action that I'm seeing. If you look at this move here, we are seeing more of green candles than red candles, meaning the momentum is bullish, and I expect it to maintain until we hit 152, where I expect it to stall a bit. So if you look at Thursday's close, it's bullish, and I love breakouts that occur in this manner, where you have a level, it touches, there's a reaction, then the second touch or the third touch is weaker than the first touch. Then I want you to see, look at this breakout, look at this breakout candle, full green candle, look at the wicks, very short wicks. So this to me is enough evidence for me to go long and actually target 152. Now for this trade here that I took, the R is 3.62. I'll be monitoring it. I already moved my stop loss to break even. Actually, my stop loss is just right below this candle. That allowed me to actually take on an additional position, and that's how I trade. I just pyramid into trades. As long as the trend is in my favor, I'll pyramid into trades. So for the USD Japan, that's what I'll be looking at come next week. Take a long trade, targeting the 152 region, and we've seen how the price actually looks like on the higher weekly chart. USD Swiss. Remember I had mentioned in my previous video that I was a bit skeptical about taking a long around here, but I did take a long. I remember it was not a affirmative action that I'll close the trade, and I'll go to the weekly time frame to explain to you why I took a long. You see, we had this level here around 85.50. It failed to hold a support. What do I mean it failed? We did break this level, and it immediately just closed. See, after this breakout candle, the following three candles are actually bullish. You see, and I remember that during that week when I was contemplating not taking the position, we had the Fed coming out to speak, and I think we had the first FOMC of the year. In my experience in the market, because I've been trading since 2019, rarely will market news change a trend that has been there for a while. Usually trends are a factor of usually if you look at trends over the years, they're usually driven by core fundamental themes. Like in the previous years, it has always been the supply chain constraints brought about by COVID. We saw the dollar rates going up in the US, the tensions around Russia-Ukraine, which are still there. So usually in a particular trading year, they just core fundamental themes that drive the market. Rarely will the market change direction because of one news event, rarely will. So that's why, and given that this trade was being supported by the weekly, and I loved the price action that was in the weekly, Actually had a long position just around 85.60, and I put my stop just as guided in my previous video, and right now I'm close to being taken out of the position in a profit. This is a 3-hour trade. So as you've seen, those are 2 3-hour trades. I trade the daily time frame. I'm patient, so I've learned to be patient over time, and you can see it pays off. I'd rather get my 3-hour, 2-hour, 1-hour per month rather than stress myself with the lower time frames where the decision making is quite difficult. I think the daily time frame is quite calm. I like making decisions when I'm calm, and I'd mentioned that this level will ideally hold as support, and we'll see a movement. I remember mentioning that past this level around 86, 88, the levels are not really clear, but I'll be targeting a move towards 88, 18. So if that breaks, I'll probably be take another long trade. And I just want to point out something. Yeah, you see, for this trade, I didn't have to wait for a confirmation for a engulfing bar to be formed here or a pin bar. You see, trends do not form because of a single candlestick pattern. Just because a pin bar is formed here doesn't mean I have to be bullish, or doesn't mean I have to wait for a pull for a pin bar at a level for me to go long. Trade confirmations actually happen. Usually, you should ideally have your confirmation before you take a trade. And I'm going back to the weekly to show you my confirmation. My confirmation was one, this level is a key level. Look at this key swing point, led to this key swing point. And the second point, bit of confluence, which made me to be bullish, this false break event around here. Do you see the false break event? That's the false break event, and the fact that we closed bullishly above that level. To me, that's enough confirmation. Actually, your confirmation should be prior price action. Do not wait for a pin bar at a level, because if you wait for a pin bar, assuming a pin bar formed, you'll be getting into the trade might win, but you might be disadvantaged. Because you can imagine I got in here, assuming you're waiting for this engulfing bar to form, then you enter following the break of that engulfing bar. Ideal from an R perspective, I'm already way ahead. So that's something you should always consider when you're trading. Your price confirmation should be prior price action, not necessarily wait for engulfing bars and pin bars and all those Japanese candlesticks that we trade. So for the coming week, I'll be targeting a move towards 8800. If that breaks, I'll be bullish. But as you can see, I already took a trade around here, and I'll be monitoring how that plays out for the coming week. Go to the next currency, New Zealand dollar. I will not be trading this for this coming week. The reason why I have it here is because I also took this trade. If you look at my New Zealand dollar analysis, I think it was my first video in this channel, I had mentioned that if we get a move towards 60.50, I'll take a long trade, and not necessarily target 6200, but as long as it gives me 2R, I'll be good. And that's exactly what's happening in this particular trade. And just to reinforce what I'd mentioned in the USD Swiss, your confirmation should always be prior price action. Going to the weekly, we had a level around 60.50, which I felt was strong enough because it held here, it held us support, and also held us resistance. To me, I remember I trade, I'm a technical trader. So until this pattern is broken, to me this level is still significant to the market. So that's why I trusted the level and I got in here just as price was testing those levels. I love getting it right at the level. And remember, in my past analysis, there are trades I'd missed because of this trading style where I just like trading right as price hits that level. So I did take the trade. I do take my entries in the lower time frame, and this one, my stop loss was based off of the H4. I did not want a close below. Do you see? Let me see if I can get highlighter tool. Yeah, let me get a brush or something. Do you see this level? That level over there, yeah. See that swing point before it broke above? That's where my stop loss was, and I was targeting a 2R. So this one is, I think it's well on its way to give me more than 2R. Yeah, actually 4R. I did get my 2R, but I decided to hold on to the trade for a while just to monitor, and I'll probably be deep diving into these concepts later and give you more reason why I decided to hold on to this trade to give me close to 4R. The reason, I just to give you a hint, look at this cell. Look at this cell. Look at this cell. here, two candles completely wiped out. How many candles are these? If you look at from here, look at all this price action. That entire price action has been completely wiped out by two candles. So meaning the sellers were aggressive, and in doing so, they leave a liquidity void behind. So typically what price will do, it usually retrace to the point of release. You see, the point of release is where now this red candle breaks the green candle, and that's where you see some bit of reaction. If you go to the lower time frames, the 5 minutes, the 15 minutes, you'll see some sort of price action patterns around this area. So that's why I decided to hold and see how price reacts to that level, but I expect price to actually continue the sell-off. But for the New Zealand, other than that trade that I took, my next trade based off the daily chart will be a close below 60.50. If we get a close below 60.50, I'll go short. And I'll be targeting the next key swing point, which is around 57.73. I always like targeting, when I'm trading off the daily, I like targeting the key swing point. What do I mean by key swing point? Let me just turn into the line chart to make it clear. Basically, the beginning point of a trend. You see this rally up began here. This rally down began here. So if I believe I'm bullish in the long term, I'll probably take a long trade and target here. But we saw from how the technicals are forming that we might actually be going down, given this rally comes off 1, 2, 3, 4, 5 touches of a resistance level. So the probability is towards a move towards 57.670 rather than a continuation of this bullish move. So that's how I'll be trading the New Zealand dollar. I'll be monitoring the 60.50 level. If we break that, then I'll be bearish. But just as I had mentioned in my previous videos, the 60.50 I expected to hold at least for a while, and I did take that trade. Euro dollar. Euro dollar is currently at a swing point, a key swing point, and I usually for this one I'll wait and see how price behaves around this level. By wait and see, I'm basically waiting for a break below, because I foresee a continuation of this downward momentum. So I would want to see euro dollar break. See the level that I've highlighted with a rectangle? I would like to see price close below that level. That will give me enough confidence to actually take a shot. Remember, in my initial analysis, I'd mentioned a move towards this level was a good shot, and see where it stalled, right at a key swing point. That was I'd mentioned. If you trade in the daily chart, always target the key swing points, areas that led to price reversals. So this, and I had mentioned that the reason why this was a good short trade was because of this fake out that happened here. I did miss this trade if you followed my videos closely, because I wanted a very when it comes to the fill, I was very particular at the levels where I wanted it to fill. Instead, I should have just targeted the outside border of that entire zone, and that would have been good. And price acted accordingly. So right now we are seeing some sort of bullish behavior around key swing point, but it's very weak compared to the rally towards the level. So I'll be waiting to see if we break. If we break this level, I'll go short. If we break this level, I'll go short. And now you probably be asking yourself, and you've not, probably I'll ask the question for you on your behalf. You see, on the New Zealand dollar, price came to a key level and I took a long. So why not take a long on the euro dollar? The significance of the level. I'm not saying this level is not significant, but historically, I'm not seeing any I'm not seeing any significant price reactions at the level. Other than this role reversal, I do not see any, like if I look towards my left, I do not, other than this small area here, I do not see any major price moves of that level. So when it comes to placing faith on that level to hold, at least for the short term, there's little faith on this level compared to a New Zealand level that has led to, has led to this, and has led to a minor area here. So the New Zealand dollar is giving me more confidence than the euro dollar. So that's why on the euro dollar I did not take a long trade at that level, given the prior action following the retest of that level. So I think with the discretionary price action trading, it's all about making judgments based off your experience, and my experience in the markets has showed me that if a level does not have previous prior touches leading to major price moves, then there's no point of going against the trend. I'd rather wait and watch how the level plays out. Yeah. So that's the euro dollar. I'll just basically be looking for a close below this region around 1.0757 and 1.0728. If we break that, and I'm already seeing signs of a break, I mean the price is already below the 20 EMA. The order flow is clearly bearish. We have more bear candles than green candles, and the bear candles have large bodies compared to the green candles in this rally. And look at the reaction at a previous key swing point. It's very weak. So this already is confirmation that if this already is price building confirmation such that if it breaks, I have no other reason but just to go short. Pound dollar. In my previous video, I had mentioned that the bears were slightly in control. And if you remember, I don't know how many of you actually remember the reason why I mentioned, but I probably want to go through the reasons once again. If you look at this level, if you look at price action following this rise here, I want you to see what happens. Look at this swing, very weak, failed to close above this level. Yes, I know there was a weak penetration, but when I say failed to close, I'm looking at body close. There's no body close above this level. So clearly the bulls are struggling to clear prior highs. I want you to look at these swings. Look at these swings. Ideally, when you start seeing swings getting weaker and weaker, that's a sign of divergence. If you were to pull a MACD, for those who trade MACD, you'll see at this, around this level, those are divergence. Around, you see how this price goes. If you just pull a MACD, you'll see a divergence, yeah? And I usually don't pull a MACD because I can easily tell a divergence just from how the price swings. And how do you tell that? Weaker swings, failure to clear prior weaker swings. That's a price divergence. Then I want you to look at the bear swings compared to the bullish swings. Look at 3 candles in this rally. Then how many candles in this up rally? Many bull candles. Look at the wicks in the bull candles. 2 bear candles. Then how many candles? This here was a consolidation. Then look, another, every time we have a bear rally, we have fewer red candles, and the body ranges actually, if you look at the body ranges, basically the difference between the open and the close, we are seeing a very huge difference compared to the green candles. So to me, that was evidence that we actually might be going lower. Yeah, and you see this is actually a lower low here, lower low, lower low, lower low, but I was not ready to go short for the pound dollar, and I had mentioned this in my previous video. I'll go short once price breaks 1.2500. I had mentioned this is an area of confluence, being the intersection of horizontal support 1.2500 and a key swing point. Why do this is a swing point that led to the last higher high. See the last higher high which price failed to break. To me, once you break this rally that led to the last higher high in a bullish scenario, if you break it, then there's a change of structure. And if that happens, then I'll be willing to go short. Willing to go short, targeting some of these areas around 1.23. So for the pound dollar, that's what I'll be monitoring. Just how do we behave around 1.2500? If we close below it, then that's a short. So for now, we're just consolidating. Last week ended bullishly, as if you look at the weekly chart, that's clearly a hammer. There's a pin bar. That's what you call a pin bar, but it's not really significant given its position in the overall market and how we are behaving. Remember, I make my price action decisions based on the daily, and the best of the daily is telling me no, there's nothing really here. It actually may be a retracement towards the boundary of this rectangle, but let us wait and see. Always react to what price is giving you, not what you think it should do. So for me, I think I'll be looking for price close below 2500 before I go short on the pound dollar. Canada yen, I brought it here. I rarely trade it, but I brought it here because it actually hit a multi-year high. And I want you to look at the correlation between the Canada yen. See how that chart looks like? I want you to look at the USD yen. You see? they're correlated. So that's why they move the same. So I'll be monitoring how price reacts around 111. For the Canada yen, I'll take a bullish trade once we have a weekly close above 1 point or above 111. If you look at this price chart, this pattern, it comes out clearly on the weekly. And given this is a very significant level, to me, the weekly close is what will give me more confidence in taking that particular trade. I only do that when price is testing major levels. Like if you're testing a really big level that has held for years, like if look, this level was tested in 2022, it has held since. If you look at the number of bars, let me see if I can show you the number of bars in this rally. This is just a weekly chart. We have 13 bars in that rally. Compare that to the up rally. From then till now, how many bars are those? Those are 47 bars. So it has taken 47 bars to cover ground to basically reverse what was done by 13 bars. So this level is really, really critical for me to just look at the daily chart as a confirmation. So I'll be looking at the weekly close above that level. It closes above that level, I'm bullish. Let's look at the Euro Yen. Euro Yen had a trade. I lost this trade. Remember in my previous video I mentioned that I felt like this was a very solid trade signal, but I did not place a lot of importance on this swing point because I didn't feel like it was really major. I felt like the 164 was a really big level, not to which is what I was focusing on. But I ended up losing because price went deeper into this swing point. I did not expect it to actually go back to these levels. It did. So I did lose this trade, but I did manage it. I did not lose the full 1R. I actually risked 1R, and I want to take you through how I managed it. So price came to the level, took me in, but those are weak bullish reaction. Look how many bars, 1, 2, 3, 4, 5. So you have 5 bullish bars. This is the H4. So you have 5 bullish bars completely engulfed by 1 bar. So to me, this was a red flag. I was like, the bulls are weak. Yeah, I was not expecting this sort of movement. Then immediately what follows? 1 bar completely reverses all that gain. So the bulls, for me, my trade exit signal would have been a close below this level. So at this, we did not get a strong close given this level. See, if you have to put a triangle, remember it's wick to body. So still we had not gotten a serious close below that level. So still holding on to the trade until I saw this. Now if you notice this pattern and you're bullish, what does it mean? It means bulls will need more volume and more bulls coming into the market to actually start clearing these highs. That's not a situation you want to be in if you're bull. Ideally, if you see bulls are struggling at a level, it means those bulls who did not take the trade, who on the side monitoring, will not enter. So you're in the trade, you will not have enough volume and momentum to actually continue that particular trade. So that's a sign that you need to actually exit. That is from a price action point of view. If it's not exit, manage the trade well. Sometimes they work out, sometimes they don't. This is trading. You cannot get 100%. So this is one of the trades that did not work out. But now compare that to the number of opportunities actually working out. I said I have a trade on USD Japan. I'm actually taking another trade tomorrow. I have a trade on the USD Swiss. I have a trade on the New Zealand close to 4R. I have actually those are the only trades which are open, and so I've lost 1R, assuming I lost the full position 1R, and on the other side I'm getting close to 3 plus 3 plus 4. That's close to 10R. Net is around 9R. I'm still in a good position if all those trades work out. Remember, my P&L is based on open positions, not the full targets that you'd planned for. Because there's a possibility the price may not even reach the target that it planned for. But at least I'll be closing out at above 5R net, yeah, for all those trades. But for Euro Japan, I just wanted to give you an update of the trade which I told you I took. And if you look closely at the weekly, there's a reason why I think I should have taken this level with a lot of seriousness. Remember what I was mentioning on I think it was a New Zealand dollar. where you have a strong sell, point of release is there. So they are not the anatomy of a swing. If you've gone through what Chris Lowry teaches, you'll be able to understand what the anatomy of a swing means. Usually if you see such strong bars, price has a habit of going back to the point of release, and that's what happened. So from a weekly point of view, this level was actually important, and I ignored that, and I paid the price. So for Euro Japan, I'm not really trading it. I'll just give you an overview of the trade that I took. On the OZN, similar to the euro dollar, because they're correlated, is actually at a key swing point. So I'll be monitoring behavior around this level. I actually do not want to go long. I'm bearish on this particular pair. If you look at how price reacted at this level, there was no strong opposition to this bear rally by the bulls. So it means this level was getting weaker, and we did break. But these are the kind of breaks that I like. I remember I've always been mentioning in my previous videos that I like breaks where more than 50% of the breakout candle is below the level. I felt like this break was not sufficient. So in these cases where you see, and to give a perfect example, you see this consolidation here. Let me just see if I can get a highlighter. Sorry, cannot get the tool. But you see this break here. This break here. See this candle, this red candle from the 16th January. More than 50% of the breakout candle is below that swing point. That swing point. Those are the breaks I want. That's what exactly I was waiting to see here. I did not see it. So in such cases on the daily time frame where there's a breakout, but the breakout candle is not 50% of the breakout candle body is not 50% below a level for down for sell scenario like this, I usually wait for that level to actually hold as support, as resistance before I trade. So I'll be monitoring it. Remember, it's all about discretionary price trading, just reacting to what price is giving you. Look at the dollar. I think it is always important if you're trading Forex to always have a look at the DXY. My initial plan was actually to get a deeper retracement to these levels, 102.60. We did not get there. And I'd mentioned that if you are for a bullish scenario, you probably might stall around the 104.20, around 104, because I felt that was a key level. We are seeing some sort of price behaviors around that. So I'll be monitoring to see how this price behaves, whether we do get a retracement to this consolidation. So I usually don't like retracements that come from key levels. You see, this is a key level that led to this sell-off. So ideally in such cases I wouldn't be trading, assume it was any other pair, I only be trading a bull scenario or put a long trade here. So yeah, put a limit entry here targeting to go long. No. I don't like retracements that come off key levels. I like retracements that occur before key levels. You see, like this particular scenario over here, we did break out. Here's was a swing point here, price retest, then you enter targeting a key level. You don't want to be targeting trading retracements that come off key levels. It's usually dangerous to your P&L. So for such matters, I'll just be monitoring. But always have a look out on the DXY because it affects majority of the pairs you trade, especially for someone like me who majorly does the USD pairs. I always have to have a look on the DXY. And if you look at my previous video, you will see one where I did a side-to-side analysis of the DXY and the euro dollar. Ideally, the DXY is just an inverted chart of the euro dollar and vice versa. So that's it, traders. That's how I'll be approaching the market come this week. Be on the lookout for CPI data. That is for day traders and scalpers. It might cause some sort of from intraday volatility. But I pray that you catch some pips. Those who are not profitable, pray you become profitable. And for those who have friends who are starting to trade out, tell them to watch my beginner to mastery series. I'll be doing a couple of videos on that. And I wish you good luck. Thank you.